Today is the 12th of December 2022. My name is David Hickson, and in today's market update, we're going to be taking a look at the S&P 500 and tying up a few details about what is happening in that analysis. Here is the analysis that we've been tracking in the S&P 500 for some time. Here, of course, is the very big trough in March of 2020, something that I sometimes refer to as the pandemic trough. It might have been exaggerated because of the pandemic and because of the news that was sweeping around the world. And so that trough might be better positioned, as I've mentioned in previous market update videos, a little bit later, perhaps a little bit earlier, probably later. But for the sake of this analysis, we are considering it to have occurred in March of 2020. The first 18-month cycle trough following that trough in March of 2020 has been phased, according to this analysis, at the beginning of October 2021, which means that this trough over here in June of this year is a trough of 40-week magnitude, and the recent trough in October this year was of 20-week magnitude. This is the analysis we've been tracking for a very long time, and you should know by now that the implication of this analysis is that we are coming down into a deeper trough early 2023, probably late February or early March of 2023, which is expected to be the next 18-month cycle trough. You can see that this semicircle for the 18-month cycle, and the circle over here is a little bit displaced to the right. That's because of the calculation of the recent wavelength of that 18-month cycle, and a more accurate estimate is provided by the conjunction of these two semicircles over here for the 40-week and 20-week cycle troughs. Now, there is another analysis that I have shown in recent market update videos, which is this one over here, based, as I've mentioned in previous videos, on what is called the ICM, or Initial Cyclic Model, which is a model that is constructed on the basis of the spectral analysis that is performed by Sentient Trader at the beginning of every single analysis that it performs. In the spectral analysis, it has found evidence of slightly shorter cycles, and so the 18-month cycle is not in fact 18 months long, but about 15 months long. As you can see, we have the same very big prominent trough in March of 2020. Again, that's the pandemic trough, and we could debate the fact that the trough could be displaced a little bit, probably a little bit later. But the interesting thing about this analysis is it positions an 18-month cycle trough over here in May of 2021. There are some analysts that believe that is where the 18-month cycle trough occurred, or perhaps in June of 2021. But the implications of positioning the trough there are that the October trough was probably also of 18-month magnitude. Now, there's nothing new here. I've been speaking about this in previous market update videos. And so you will know that there is some debate as to what the magnitude of this trough in October was. In my opinion, it was probably the analysis shown previously. In other words, this was a 20-week cycle, and we are expecting a bigger magnitude cycle trough occurring early next year. But we have to bear in mind that this analysis is possible, and that is why we are monitoring very carefully the cycle shapes that are playing out following that trough in October. So let's take a look. We'll switch back to the other analysis, my preferred analysis, to take this discussion further. Let's start by zooming in on this period of time over here, and I would like to point out something interesting that happened last week. If we plot some VTLs, this is the 40-week VTL, and here is the 40-day VTL. We'll take a look at the 40-day VTL in a moment. But the 40-week VTL provides us with some interesting information, and something very interesting happened last week. First of all, when price was crossed to the downside, at least when price crossed the VTL to the downside, that confirmed that we had a peak of 18-month magnitude behind us. And so indeed, that peak over here in January of 2020 was probably of 18-month magnitude. But now let's turn our attention to this downward pointing VTL. Let me zoom in a little to take a closer look at it. This VTL joins this peak over here with this peak over here. And you will notice that last week, or in fact about 10 days ago, price came right up to the level of that VTL, almost touched it. Didn't quite touch it, and then dropped down again. That was a very interesting moment, because if price crosses up above this 40-week VTL, and that's a big if, in fact I'm going to write the word if over here, that's a big if price crosses up above the 40-week VTL fairly soon, that would confirm that a trough of 18-month magnitude is in place. In other words, that would indicate that this trough over here in October was probably of 18-month magnitude. That has not yet occurred, and so in my opinion we are still looking at a 20-week cycle trough over here. As a matter of interest, when it comes to having two possibilities in an analysis, I always ask myself, which is the more dangerous one? Which is the more dangerous possibility? The more dangerous possibility is the one that we see on the chart in front of us, because it implies a greater magnitude trough early next year. In other words, if we are feeling confident in the recent bullish move, and we expect that move to continue, then the danger of that opinion would be if this analysis is correct and the market comes down further and harder into an 18-month cycle trough early next year. However, if the other possibility is true, in other words, that the 18-month cycle trough does lie behind us, then we are going to continue to see some upward and downward cycle action, and we would see a 20-week cycle trough form at about the same time early next year. But it would not be quite so dangerous for us, if you understand what I mean, because the price is not likely to move down quite so hard and quite so fast. And so this is the more dangerous option, in my opinion, because it does warn of a stronger and faster downward movement. In my previous market updates about the S&P 500, I have spoken about these cycle shapes, so I'm not going to dwell on them too much now. But as you will know, we are expecting price to move down into an 80-day cycle trough, expected around about Christmas time, perhaps within the next 2 weeks or so. Then we would expect another bounce, and then of course we're expecting another move down into the later trough that is going to occur early next year. And so, as mentioned in previous market update videos, we are watching very carefully to see how this cycle action plays out. We have marked on our calendars the times at which we expect the 80-day cycle trough and, of course, this much bigger trough early next year. Or perhaps it won't be much bigger. Perhaps it will only be a 20-week cycle trough. But what can we say has happened in the meantime? Let's display that 40-day VTL again. There's the 40-day VTL. It's a rather interesting VTL because of the fact that it joins this low point over here with this low point over here, as opposed to the 40-day cycle trough that has been found in the analysis, which is over there. But that is in fact correct according to Hurst's rules, and I'm not going to repeat them here, but if you look at the rules very carefully, you will see that this VTL has been correctly drawn according to his original rules. And so when price crossed down below this 40-day VTL last week, that confirmed that the 80-day cycle peak was in place. In other words, that is the 80-day cycle peak that I've been speaking about. In the previous 2 market update videos, I believe I was speaking about the formation of this peak and discussing how peaks can be complex or complicated. And so the 80-day cycle peak is in place. Price is now moving down into an 80-day cycle trough. That is the next thing that we are expecting, and we've been expecting it for some time. So let's consider carefully that 80-day cycle trough. First of all, this is when we expect the 80-day cycle trough. Here is the circle. As you can see, it is on about the 18th of December. But that circle is part of a nest of lows, which is centered, as you can see, on about the week after that. And so that's why I say we expect it around about Christmas time. Notice, however, this whisker for the 80-day cycle, which extends all the way back into about a week ago, indicating that it is just possible that an 80-day cycle trough might be forming already. It could possibly be an early formation of the 80-day cycle. Now, if the magnitude of this trough in the middle of October was of great magnitude or higher magnitude, then we might expect early cycle troughs. Looking at this analysis, the position of this 40-day cycle trough is a little bit questionable. As you can see, it's been positioned over there. Many analysts would probably position it over there. Some analysts might position it over here. as a trough that preceded this strong move up on this Thursday in the second week of November. And so because the position of the 40-day cycle trough is a little bit questionable, we cannot rely too much on the position of the next circle for the 40-day cycle trough. And so we need to be on our toes for the potential formation of an early 80-day cycle trough. I don't believe it is going to happen. I'm still expecting it to happen ahead of us. But let's have a look at some levels that we can watch to confirm whether that 80-day cycle trough has formed or not. Let's start with the 20-day cycle FLD. As you know, I enjoy working with the FLD as a tool because there is a regular sequence of interactions between price and the FLD for any cycle. And what has happened recently is that price has crossed down below the 20-day FLD in an F category interaction. In other words, it's crossed down below the FLD on its way down to the 80-day cycle trough. So one level that we can watch is this 20-day FLD. We would, under normal circumstances, expect price to bounce a little bit after it's reached its target, and the crossing point at which it crossed that FLD was over there. I've drawn it very roughly on the chart, but that's the level at which price crossed the FLD. And as you can see, the target for that price cross has already been achieved. And so because the target has been achieved, it's quite possible that price will give us a bit of a bounce out of what is probably a 20-day cycle trough. But the important thing is that we would expect this FLD then to provide resistance in what we label a G category interaction with the FLD. If price finds resistance at the level of the 20-day FLD and then drops down further in an H category interaction where price drops down away from the FLD into this 80-day cycle trough, that is what we would expect, and therefore we are expecting the 80-day cycle trough still to lie ahead. If, on the other hand, price unexpectedly bursts through this FLD to the upside, we would have to consider seriously the possibility that the 80-day cycle trough has come in early. Now let's take a look at the 40-day FLD. Now the same sequence of interactions plays out with the 40-day FLD, and we would usually expect price to find support at the level of the FLD at about the time that the first 40-day cycle trough forms after a trough of at least 20-week magnitude, which is of course what we have here in October. It is interesting to note that price found support at the level of the 40-day FLD at this point over here, which I was mentioning earlier. Many analysts might consider to be the correct position for the 40-day cycle trough. The interaction that we have experienced this past week between price and the 40-day FLD would be labeled a D category interaction as price crosses down below the 40-day FLD on its way down to the 80-day cycle trough. Fortunately, it also generates a target, and that target has not yet been met. That target, as a matter of interest, is at about 38.20. So over here, that would be a very reasonable point to expect price to reach as it forms the 80-day cycle trough. And so we now have a target for a potential price level for that 80-day cycle trough. We also, of course, have a potential date range, as you can see from this nest of lows here at the foot of the chart. And so you can see how, as price action unfolds and as these FLDs are crossed, or as the FLDs provide support or resistance, we are able to refine our expectation of what is happening in the markets. And so, to summarize, we are still expecting an 80-day cycle trough to lie ahead of us. Round about Christmas time, we now have an approximate price target, and we also are watching the 20-day FLD and, of course, the 40-day FLD, but the 20-day FLD is more pertinent at the moment for signs of price finding resistance at the level of that FLD and demonstrating that it is still on its way down to the 80-day cycle trough. I do hope that you found this market update useful and interesting. Please make sure that you visit our Hurst Cycles Notes site, where we have a great deal of analysis published frequently, and join us on our Hurst Cycles Discord server to get into the conversation with other Hurst Cycles analysts. If you have any questions, you are of course very welcome to put them in the comments below this video. I look forward to hearing from you.